Well, hello everyone. It is the Naples Money Managers News You Can Use. I'm Dawn Litchfield Brown. And I think you know this guy over here in blue, little boy blue, Dennis Nelson, Dennis the Menace. We have all kinds of names for him.
Yes, you do. But hello anyway.
I'm adjusting to my new eyes. I have gotten my eyes corrected, so I have to get used to wearing glasses to read now. And now I can see all of you. You're so clear out there. It's wonderful. But I still can't wear eye makeup yet, so I feel a little odd. But anyway, here I am, bald eyes and all. A couple things to remind you about, like I generally do. We are sending everyone out little notices that it's time to schedule your reviews. Maybe you're scheduling an annual or a quarterly or a semi. But please, when you get an email from Marcus or from me or from Anna, respond as quickly as you can so we can get you on the calendar. We want to review our new reports with you. Once you've seen them and you're accustomed to them a little bit, you'll be getting a quarterly every quarter now in the mail. Regardless, you'll still have your meetings, but you'll get this in the mail. It'll be sweet and short, 3 pages. It's going to be awesome. I hope you're going to love it. I hope you're going to love it.
Well, the good news is we can print these out probably in a day.
I know.
Whereas it took us a month before.
I know, this is great. I have to say, every once in a while, technology does surprise us. It does actually make for less work, less copying. Okay, so couple little points I always like to bring out that I find interesting. That the confidence index for retirement is actually at a 2-year high. Now that's kind of surprising after everything we've been through and people are worried about taxes and all these things. I think the fact that their real estate values and their market values have gone up so nicely, I just hope people are wise about how they're handling those values.
Yep, and maybe the fact that we've been through the worst and we're okay.
Yeah, that could be it too.
If we survive, that is.
Yeah, well, we're still alive, kicking. Another interesting, the personal bankruptcies fell sharply in 2020 with Chapter 13 bankruptcies filings down. So they fell, not as many bankruptcies, down 46%. That's huge. That's a huge percentage. I was like, holy cow. And there's a $2 trillion combined market cap of all cryptocurrencies that hits a record high on April 5th. And we talk about these cryptocurrencies all the time.
That's down under $1.5 trillion now.
Wow.
So it's amazing how volatile those cryptocurrencies are and the market cap.
And people still want it. And I have a whole piece in here about people that want cryptocurrencies and how careful they really need to be about what they're doing.
Yeah, they need to get over it.
They don't want to have that, was it FOMO? Fear of missing out. Fear of missing out.
Yep. Don't
have that fear, because that can get you into some big trouble. There's probably some other four letters for that, but we won't talk about them. GameStop announced that it plans to sell as many as 3.5 million shares following its stock Reddit-fueled surge. That was a while ago. I don't know if they ever did that or not. Marcus was here; he'd be able to tell us for sure. But I just find these little things kind of interesting. And also people might want to think about converting to Roth IRAs, something they should be talking to their CPAs about now instead of waiting till the end of the year. Some people said they want to wait till the market drops, and so they'll have less to convert and less to pay tax on. I guess it kind of makes sense, because once it gets into the Roth and you leave it there for 5 years, it grows tax-free and comes out tax-free. So typically the younger you are when you do this, the better, the more benefit that you'll have.
I guess there is some logic to that.
Yeah, I mean, if you kind of think it through, but
Yep.
I don't know, wishing the market to drop doesn't make a lot of sense to me.
That doesn't work for me either.
So Dennis, you've got a little to talk about high yield bonds, I believe, right?
Well, we're talking about high yield bonds and the impact on the bond market and on people's view of the bond market in this day and age of low interest rates, where we're seeing non-risk type investments, treasuries in other words, and CDs below 2%. There's a real scramble for income, and a lot of people have been looking at stocks that have high income, particularly the what we call the BDCs, the business development companies, a lot of times you can get 10% dividends on those. I know, wow. And there's some other areas, mortgage REITs, mortgage bonds, or companies that deal with mortgage bonds can get pretty high yields, but you got to watch it. During the pandemic, well, to step back to a second, junk bonds that we like to call them, typically have a foreclosure rate of around 4%. They jumped to over 6% during the pandemic, but that was far below what people were thinking they might.
Yes, you thought they were like 20% or something, as I recall.
Absolutely.
Yeah.
But maybe there's a little bad news in that scenario too, which is to say that there's a lot of companies out there that are on the brink of going under, have managed to forestall that because of some government action,
Right.
but they're still in trouble, and maybe we're going to start seeing that show up. So watch out for these high interest rate type securities right now.
Well, they typically tie your money up too, right? For a period of time, they're not as easy to get in and out of. Some of these private REITs and some of these private things.
Well, the private ones, absolutely, but the public ones, you can get out of them. But a lot of times the stock's already gone down, and you find yourself taking a loss that's bigger than what the income you got from them.
So our new website talks about, seniors are starving for income and can you live off of 2%? And I think that's partly what's driving the stock market to some degree. In some of these other areas, people are desperate to find, 4 or 5% income. So they're looking at a stock with a good dividend or a REIT or whatever it is, a bond, a high yield bond.
Absolutely, and with our program, the Mapato investment program,
Power.
and the double income, we deal with the best of securities, the best of stocks that pay dividends, that are good quality. They may go down in value, but they're not going out. And then we double that by our options.
Right. It's really fun once you get into it. Because most people don't want to get into it.
That's true. Most people don't want to get into it. I'm passionate about it.
Yes, and we're all rather passionate about it because what we do is very unique. It's very time consuming, and we feel that your money managers should work for what they earn. And believe me, we do. So, until next week, this is Money Matters. But most of all, and most importantly, you matter, and we'll talk with you next week.